Steve, I think there's probably an element of both there, and it's certainly been a rough year for WPP since the departure of Martin Sorrell, which has been well publicised. But there are also big structural shifts going in the media landscape at the moment. The likes of Facebook and Google are attracting more advertising directly. The consultants are beginning to create some disruptive threats. And unfortunately for WPP, in the last few weeks, they have lost a number of high-profile clients, like Ford and American Express. And it only takes a small miss on the top line, like we've seen today, to have quite a magnified effect on the bottom line.
Yeah, and this is the point that you were both making as well. And it's one crime to lose on your sales figures on a like-for-like. It's another thing to lose on the margins, on the business you're holding as well. So the competitive pressure is vicious. So, I mean, look, it's a stock that, as I say, was travelling in the direction of 17 quid at one stage. Now it's half that price. It's still hard to see the catalyst to want to own this, though, isn't it?
I think it's very hard to see a catalyst, and as we were discussing earlier in the programme, the economic environment, particularly in the States, with growth over the last 6 months annualised at over 4%, consumer expenditure strong. So the economic environment has been very positive indeed for anything related to the consumer sector like advertising. So, if one looks at WPP, one has to therefore look at structural issues and their future role and their future strategy relative to companies like Facebook, Google, etc.
So here's the thing, you quite rightly say, and there's a point that has been raised around this desk as well, is that a small miss on expectations, whether it be on the margin, whether it be on the expected earnings, on the outlook, or whatever it may well be, is being dealt with vast punishment with WPP today, now down 21% as we speak as well.
It's free fall, isn't it?
And so how much of that is a metaphor for the broader market? There is so much built in terms of valuation, in terms of expectation, that even if you're hitting on the numbers, which they are hitting in the third quarter in the US, earnings are up 22.4% so far. That is a beat, but it's the outlook which has been slightly downgraded. That's the broader concern. So what I'm saying is, every time there's a miss now, we're getting very, very vicious treatment to the downside.
Completely agree, Steve, and this is something you've seen in the last few weeks. As we've entered results season, any companies that are missing are being punished ruthlessly, and particularly those that have structural concerns where potentially the room for improvement is not necessarily short-term.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.